Okay, good morning and good to be here. This is my first visit to New Zealand. I've been traveling for last 4 years, 15 days in a month. Somehow I missed New Zealand. I think we got that ticked off. So with this visit to Wellington, uh, I think what I'm going to share with all of you is our own journey for last 4 years. How we took a very nascent industry called FinTech, and we work with a very close partnership with the private entrepreneurs and with the government's own interest in developing the sector, which I thought will be interesting for all of you, given we have very similar nature of the ecosystem we run in Singapore. The way the government operates in New Zealand should have something common where we can build a model around which Singapore has built its own fintech success. As I was sharing with you, there's one number which I think in hindsight defines how we have grown from a $20 million business in 2015 to $1 billion touching this year. If you think about the multiples, it's quite remarkable. And we always question when in 2015 we started that where with a country with 5.5 million people, what fintech story you can tell. Normally, when you look at a country about fintech, it's all about the size of the market. That's how we define fintech hubs. But we, with 5.5 million people, to make fintech as a big part of our growth was something we learned through the process, which I'm going to share with you today. Now, but I'm here as a regulator also. I have a responsibility to share what we as regulator. I think I heard a question today morning about what role or some role regulators play in this whole space. By design, fintech has this challenge of, or a perception of that if the regulators don't support, it will not grow. And I use the word perception with deliberately because there are some truth and there are some myth around that. So my first 3 slides will be on regulations, then all the slides are fun. So the first thing, when you think about regulation, it's almost people think it is anti-innovation. It is designed to restrict you to do new things. But it's more about regulators did not do a good job of explaining why they do what they do. So the best way we can construct ourselves as regulators that we are conducive to innovation. And I think many a time regulators are viewed as people who are going to catch up once innovation is done. So the shift we did in 2015 is that we will not front run, we'll also not come later, we'll work together. There's a shift MAS did in 2015 that we are going to work with the entrepreneurs, with the innovators, same time together. And there's a question around sandbox, which I'll soon talk about. And that was the genesis of sandbox, that having a regulatory sandbox signals to the market that the regulators are willing to work with you at a very early stage. And that was one of the most crucial change which triggered fintech revolution in Singapore. There's a word called materiality and proportionality test, and similar risk and similar regulation. What it means today, when you think about regulation, it comes like a big box. And if you are doing banking, here are the 100 regulations you have to follow. If you are doing insurance, here are the 100 regulations you have to follow. But the world has shifted. What we saw in financial services, that it has unbundled pieces of the classic financial services to microservices. And that's what fintech is all about. They have stripped out the payment out of the old financial sector architecture and created separate services. They've stripped out lending and created a P2P lending. They've stripped out investment and created a crowdfunding. They have stripped out capital market and created a private market opportunity. What is happening last 10 years that innovators or the entrepreneurs are looking at stripping out pieces of the old financial service architecture and start delivering at a high value services. Now, we as a regulator must respond to that. As financial services are getting unbundled, we must also unbundle our regulation. And that is what it means, what we call as activity-based regulation, which means if you are doing a certain activity which seems to be financial services, we must design a regulation which matches to the risk that particular activity is bringing. So if you are a fintech company, if you are doing payment services, you should be regulated only for payment services, not like a bank. And that dramatically reduces your regulatory burden, and you are still managing risk better. And that's what we build as, that's what we call as activity-based regulation. If you are doing peer-to-peer lending, you should be regulated as a peer-to-peer lending company, not as a bank. So that's a shift. That's a shift regulators are looking at as they're thinking to support this market. And that's critical, that's crucial for a success of fintech for any market. How does the regulator respond by unbundling their existing construct to activity-based regulation? Now, to do that, most regulators are very nervous. And to support that shift, what we call as a method of how we deal with regulation in terms using sandbox. The first thing I use word delay regulation. Now that's quite serious undertaking, because many a time regulators are not sure when to intervene. But if you are at the early stage of an idea, it's okay for a regulator to delay the regulation so that it allows us to see that product getting developed. And this is where we start introducing a public-private engagement. We try to understand what they're trying to do. The only thing we ensure at that time that you are not doing anything which creates consumer protection issues. As long as you are clear and you have clear disclosure, we will work with you without a regulation in place. And that's crucial because that allows very early stage ideas to succeed. The second one is update regulation. And it takes years and years for regulators to update the regulation. So by the time they are getting the regulation done, the product becomes a legacy product, which means you are updating regulation for a meaningless change. So one of the way to do is to go with the process and find a way to fast track the whole regulatory process getting updated. In Singapore, as an example, last year we changed few regulations to support the whole crowdfunding products. Our payment service bill, which went into law this year and is getting into production by end of the year. That's an interesting use case. If anyone of you want to understand how you can take a classic entity-based regulation and break down to small activity regulation, please take a look at our publicly available paper on payment service bill. We took a single regulation which used to call as Payment Service Act, and we broke down to 7 pieces of regulation, 7 distinct services, starting from issuers, acquirer, mobile wallet operator, crypto token operators, the whole set we broke down based on the market trend, and we allowed ourselves an opportunity that in future, if new businesses reflects in the payment service, we can regulate them in a modular way. So modularization of regulation is a key construct of that particular regulation, and that kind of expands the opportunity for many players to play a role in this new growing market and get regulated so that we get to manage the risk better. So in a way, if you modularize the regulation, you can capture bigger set of players and you can regulate them better in a way which is manageable and proportionate to the risk it brings. And we put some safeguards in place for money laundering and terrorism financing and other risks related to technology. This is where it comes to sandbox, suspend regulation. Many a times we get ideas which is production in nature, but both the entrepreneur or the fintech company and the banks who want to work with them are not sure of existing policies supporting that regulation. So we bring them to a sandbox construct. And this is where we give a 6-month or based on what the request is, a certain exception to that product, and we put certain constraint around that product so that number of customers is limited, number of transactions are limited, and we allow that experiment to happen in that fixed period of time. And our regulators work with that company to understand, is it creating new risk? If it creates new risk, we want to understand what compensating controls we can put. And once the product gets out of that sandbox, we make it a level playing field for everybody, and that entity will then comply with the full regulation. What sandbox does, it allows fintech companies to test their product within the regulatory framework, and that allows investors who are backing the fintech company to be more sure about the product they're investing for, and that creates a much more vibrant ecosystem for fintechs and investors to think about the future roadmap of the product. Now, here's the myth we discovered in the whole. In fact, there's a question or there's a response from High Commissioner saying that we may not need a sandbox in New Zealand. The reality could be, yes, you may not need a sandbox in New Zealand, but it creates a strong signaling opportunity saying that the regulators are at least interested to deal with your request and want to see whether you need a sandbox or not. When we ran this sandbox in Singapore, till now we have received close to 80 applications. Only 6 applications were required to go through the sandbox process. What does it say? It says that the existing regulation in Singapore is good enough for that applicants to run what they want to run. So there's a myth saying that the current regulation was not conducive for that particular product to be run, got clarified because we had a regulatory sandbox. So the market anxiety got resolved because there is a sandbox. They applied to it, we had a dialogue, and they realized they don't need any additional regulation or they don't need to be regulated. So I presume that if the Reserve Bank here opens a sandbox, you may have a similar outcome, that the number of applicants who may require a real sandbox could be very small, and who may not require sandbox will be far bigger number. And that's good. That explains the strength of your regulation, that explains the openness of a regulation, that you can accommodate new ideas. But it's essential to have a sandbox that at least signals that you're willing to have a dialogue. So I would strongly encourage market policymakers to open a sandbox in Singapore, in New Zealand, because that allows that dialogue to happen. But something interesting we also learned here, which my friend from Singapore, Navin Suri, CEO of Suspend, is going to talk about, which clearly changed the way Singapore thought about the whole experimentation. And he's going to share a program called API Exchange, a product called API Exchange, which is a public sandbox. It's not a regulatory sandbox, it's a public sandbox which was developed by MAS in partnership with many partners. One of them is Percipient, and Navin is going to speak to you around 4 o'clock. Please do stay for that session, because that will change way New Zealand operate the whole fintech ecosystem. That was a key in fact, that is going to be a platform which will take Singapore to the next 5 years of fintech revolution. So please stay on to hear what Navin is going to share about the whole API exchange, which is a public sandbox, which probably is more needed than ever in this context now. Okay, now the fun part. So I've done with the regulation. The single message I was trying to convey, that your regulators must engage with you, and in an open, in a transparent way, in a public engagements, through partnership, through POCs, and through a regulatory sandbox. It makes sense. Now, I use this slide to explain a much macro picture of Singapore. Why, in a way, Singapore developed for last 4 years a certain infrastructure, policy making, and some talent development which defined our fintech ecosystem in a macro way. And these are the 10 big enablers which drove Singapore's digital architecture. The first 4 P's is the trust infrastructure. We believe the future is about digital identity. And any country which is going to stay behind defining that trust infrastructure will lose out in the digital economic construct. There are 4 elements to that. And this is inspired from India's own Aadhaar India Stack. I don't know how many of you know about India Stack. It is India's largest public infrastructure, which covers 1.3 billion people on a digital infrastructure which costs $1 per identity, which changed the way India is looking at the future of their own economy. So this is something inspired in that context, but it essentially says 4 things. Every country will have a trusted digital identity which represents an individual or a corporate. If you don't have that, it is hard to operate in a digital economy. because it will be faceless, presenceless, and we need a trusted identity to do global business in the new digital economy. The second piece is data hub. In the world of fake news and fake data, I think it is essential for us to have a public infrastructure for a trusted data hub. And I'll share some examples in Singapore. What does a trusted data hub means? The third piece is a customer consent architecture. It may sound a little policy choice there, but that can change, that can make and break your digital economy. If you are following the India Stack story, last year the Supreme Court of India came heavily down on the government because they did not look at the consent architecture carefully. We believe in the digital economy, every individual must have empowerment or choice to make with whom they share the data. And they should have public infrastructure which allows them to track, monitor people who have received the data, how they're using it. And that is called consent architecture. The electronic consent which allows all of us to share our data to third party. In a way we can track, monitor, and decide to withdraw if we choose to. Very critical from a long-term public policy making to have that infrastructure in place. And the fourth piece, as in a physical economy, we talk about roads, hospital, bridges. In a digital economy, we must have public infrastructure to support such growth. A strong payment system infrastructure, trade process, digital trade infrastructures. And I have some examples to share later on in the slides. So there is need to build strong public or trusted public infrastructure which will drive digital economy, be it moving money, be it exchanging identity, sharing data, or sharing trade-related information cross-border. The next four pieces, policy choices which public sectors have to make, or government has to make to support this whole digital economy, is the 4 ABC of tech. And here is where many governments have not done much about it. And we in Singapore have managed to do something about this because that kind of helped the ecosystem to grow because we made some policy choices in this 4 technology. The first one is API-driven architecture. Now, it is important for governments to come out and say, we support this architecture. 2015, yesterday I was sharing, when we were deciding what model Singapore has to look at from a FinTech perspective, we decided to go after the B2B, business to business, business to business to customer models, which means the biggest consumer of our FinTech are going to be the banks themselves or the insurance company themselves. And they used to have an architecture which I call as enterprise architecture, which means if to connect to them, you just have to spend millions of dollars to do integration. We used a public document. We created a public document called API policies, which we issued. It was almost a 500-page document, which indicated to all the banks that there are this 500 plus APIs which you can build over years to come. And if you build it, that's where you can inject your new services by partnering with FinTech. And it's a public policy. We encourage a lot of banks to actually publish their APIs. That creates that opportunity for FinTechs and the banks to collaborate. If you can Google yourself, between now and 2021, total incremental IT spend will be close to $500 billion by global banks. And out of the $500 billion new spend, bulk are going to come from FinTech companies who are supporting B2 and B2B2C. And if those banks don't have the APIs to partner, that $500 billion is going to IBM, not to FinTechs in this room. And the way to create this new opportunity is to build those APIs to the banks so that they can find the opportunity, not paying large tech company enterprise solutions, which is not bad, but not necessarily the most exciting software. Then we put some public policy, public experiment around blockchain and distributed ledger. There's a bit of skepticism around those technology, but if any country want to succeed, they must invest on technology which is new and at early stage. And we have put a lot of public projects around blockchain and distributed ledger, because in the world of data getting nationalized by different countries, the best way to run that and process that will be perhaps a distributed ledger technology which allows you to process data without moving the data to your country or to other countries. MAS came up with the cloud computing guidelines in 2016. Why? Because one of the biggest impediment to this whole fintech growth or the bank's own digital journey was lack of cloud computing policies. In fact, 2 years before I joined my job, there was one of my colleagues went to Las Vegas and says, if you use cloud in Singapore, you will go to Changi jail. So that was that regulatory stance we took, that it is not good to go in cloud. But within 2 years, we made our change because we believe future is going to run in cloud. Government must come with clear policies around how they're going to support cloud. If they don't do it, I can tell, forget fintech, forget tech. It's not going to work for you if you don't have a clear policy around cloud computing. And the last piece, which I'll leave it Dr. David Hardon to share, why we believe having a proactive policies around data and AI will also help to construct and build the future data AI companies. And I will hold that detail for him to articulate in his keynote and in his panel. The last two pieces are the talent piece. And interestingly, when you think about talent, you think about training people, training the financial sector staff in my context as a financial sector regulator. But we also took at talent in a different way. We looked at talent, can we develop more entrepreneurs? We believe the future financial sector will be driven by the startups. So what can we do as a policymaker to support the startup ecosystem? We have a whole range of policies which allow startups to grow in Singapore through seed funding, government support, which allows us to find a way to get very creative people to come to this startup sector and help us to redefine our financial sector. And a lot of effort is going through universities, polytechnics, vocational training to build capacity within the industry, within the policymaker to support this change in economic construct. And the last piece which I spoke about, policymakers have to stop this bad idea of making policy through public consultation and white paper. It's not going to work, especially on technology. Because by the time you make your public consultation, by the time you make your white paper, the technology has become legacy. It takes three years. By the time you make a public consultation, you publish a white paper, it goes to parliament, and technology moving at a speed of 6 months. The policymakers will move at a speed of 3 years. Imagine by the time the policy comes out, what technology you're going to supervise? A old technology, a legacy technology. That mismatch has to stop, because the only way policymakers can react to speed of technology is through experiments, collaborating real time. And that's the reality we must accept as public policymaker if we want to really make a big difference in this space. And of course, everything gets binded by the whole cybersecurity, but that's a core non-negotiable contract we tell to everybody. Whether you're a fintech or a bank or an insurance company, you cannot compromise on cybersecurity. If the next financial crisis has to happen, it will be a cyber crisis. It will not be a financial crisis. It will be a cyber crisis which will do irreparable damage to the whole ecosystem. Now, a few examples. I have 7.5 minutes left so that I can quickly share with you what has been done in Singapore. Connecting people. If you want to build a strong digital ecosystem, you must have public infrastructure which allows you to connect people through an open, shareable data infrastructure using a national identity and a trusted data infrastructure. You can always Google MyInfo Singapore. It is a public infrastructure which combines three things. It combines identity, your personal data, and a consent architecture. Today, if you want to open a bank account in Singapore, you can do it in less than a few minutes. All you have to do is enter your SingPass, which is our national identity equivalent, you consent, and it pulls out data from MyInfo, a trusted public infrastructure which source data real-time from 10, 12 agencies, and you consent the data to be going to a bank. Banks open the account, you're done. Similar services exist for health, other sectors. Our idea is to completely change the way we think about data being used to onboard customers to different services. It will be through an identity, trusted data, consent architecture, and that's my info. And we are the first sector to build the whole construct through what we call as a public KYC utility. Second, connecting infrastructure. Example, we are also building what we call as a global stack. A global stack is an audacious program which we have started a few months back. The idea is to bring multiple countries to a common infrastructure called global stack, which will build around the same principle of a strong identity platform, payments platform, a transaction layer, and a data layer. Where are we on this? We have partnered with Bill Gates Foundation, Google, and the Indian government, and few other governments, and also looking at 10 partners. 5 of them have signed up. Hopefully by Singapore FinTech Festival, we have 10, and of course Bank of International Settlement, to agree on a common open source code which can be used by respective country to build the national digital rails. This program can create far more impact than any paper agreements people make among themselves. You are building systems based on common software code which will connect faster, help to connect the data layer, help to connect the transaction layer, help to connect the payments layer, which can significantly change the way we think about the digital economy. And of course, policymaker can follow up with some paperwork through agreements. But that's after the systems are done. That's a better way to do things than putting a lot of discussion and debate, and the systems follows after 10 years of the discussion. So we have started this program. Hopefully, we'll get it through early next year. Connecting payments. Still now, it's hard to move money from A country to B country without paying a lot of money. Ideally, it should be instant, almost zero cost. You should be able to move, provided do a good KYC check in both ends. What we have done in Singapore, we have completely abstracted out the complexity of payment system to simple 3 clicks, and all you have to know, if you are moving money in Singapore to each other, all you have to know either the mobile phone number or the national identity. In 3 clicks, zero cost, I can move money to each other, to my friend's account, because we put a public infrastructure which abstracted the complexity of the payment system to simple 3 clicks, an API-driven transfer called PayNow. Why I'm sharing this with you? Because as we speak, India has done it, Thailand has done it, the few countries are in the process of doing it. Once this country builds this abstracted layer, all you have to do now, I can send money to a mobile phone number. If New Zealand has this infrastructure, I can send the money to a telephone number in New Zealand from Singapore, provided that telephone number is mapped to a bank account number which sits on the local payment rails. And that process becomes simple, few clicks, near zero cost. So this is going to be a key architecture in future as countries are making the payment system simple. Connecting trade. We are also putting together a platform called Business Sans Border. The idea behind is that we are seeing okay, 2 minutes left. Okay, one more slide to go, I guess. We are putting a platform which will connect small, medium enterprise directly to between countries. And there will be this AI engine which will run in between, which will match exporters and importers from different countries, and the whole value chain in between, from trade financing to custom clearance to certification of good, will all be available through an electronic platform and at the best price, because it's an open matching engine which looks for the best partners or best price between a buyer and seller located in 2 countries. The first pilot will go live this year. It is between India, Singapore, and Philippines. And I hope we can get New Zealand into this party. In interest of time, I'm going to the next slide, connecting technologies. And I'll not speak much about this, but if one thing is worth today listening to and spending time will be hear about APIX. We are extremely, and this is nothing to do with Singapore to start with. Let me put a disclaimer. This was my personal frustration among many of my colleagues when we used to work in corporate. I used to be the global head of innovation in Citi. My 3 years didn't turn out to be fruitful because I had few problems to deal with. First thing, my CIO will never allow me to get a fintech to the bank. And if I can get it to the bank, it will be a 2-year process. The fintech would have gone bankrupt. Because the way banks work with fintechs, they believe fintechs can do a free proof of concept. They can sit on their doorstep selling the product, and by the time they're ready to talk, either the company has gone bankrupt or the procurement head of the bank believes that process doesn't allow the fintechs to work with them. The second big problem is that banks don't want to expose that technology network to third-party fintech, and they want to ensure a series of checks before they can manage to get there. And the third, banks themselves are not sure what technology to use. They don't know where to go for. This platform has attempted over 2 years to solve that problem. And we believe collectively as an ecosystem beyond Singapore, we can work toward this collaborative network. Collectively, the world of fintech will dramatically change. And if you get it right, that $500 billion which large banks are going to spend and give it to Accentures and IT and IBMs of the world may shift a couple of $billion to New Zealand, if you get this right. Because that's the way banks will understand the power of solutions, power of technology coming from entrepreneurs, from startups, and make themselves not only efficient and also make their processes better. So I will leave that detail for Naveen to talk about later in the day. I think I'm done with my slide. I want to encourage all of you to come to Singapore FinTech Festival. It is a discovery by chance from 1,000 people aspiration to now. This year we're expecting 70,000 plus people in the festival. I don't know why that growth, but I shared a story yesterday. I may, in the greater interest of all of you, share that little 50 seconds to go. Okay, here it goes. When in 2016 I wanted to do a festival, I was told that you cannot do beyond 1,000 people. That's all a regulator can handle. And I had a partner by name Ibun from as director of ABS, Association of Bank, and she looked at her Bible and says, Sops, if you think I go by the Bible, and I believe you, I'm going to support you. Poor lady, every time the number goes to 2,000 or 3,000, she calls me, you got to stop that damn website. And no more registration, I cannot deal with that. It so happened, this is the one thing I give President Trump a big credit, Singapore FinTech Festival. Why? On the day of the US election, when President Trump was due to get elected, I told my team, you know what? Today is the great US election. Nobody cares for Singapore FinTech Festival. Keep the website running for one day. US election got announced by noon. We had 8,000 plus signups by 3 o'clock. Website went down. So there's a spurious correlation between President Trump's election and the great success of Singapore FinTech Festival. Please do come this year and enjoy this festival. Can a video be played on the FinTech Festival? Thank you very much.